welcome. You're joining us at Hyde Park on Ada Derana 24 tonight. And tonight we will talk about the Colombo Stock Exchange, the regulatory role of the Securities and Exchange Commission, as well as what new measures are being taken by the Colombo Stock Exchange and the Securities and Exchange Commission in order to enable a smooth trading platform for investors. I've invited to our studios the chairman of the Securities and Exchange Commission, Viraj Dayaratne, joining us tonight. Thank you very much for your time here.
It's a pleasure to be here, Indeewari.
A President's Counsel, and you've also been attached to the Attorney General's Department. I think there's also a bit of a legal background that I would like to touch upon when we talk about investments as well as regulation of trading. But to begin with, I think we're hearing about a lot of concerns pertaining to a delivery versus payment platform, a system that is being introduced by the Securities and Exchange Commission together with the Colombo Stock Exchange, and you intend to go live on the 26th of July. But what are you going to take away from the investors by introducing this system?
Yeah, Indeewari, to begin with, this is a long-felt need. I'm told we have been working on it for years and worked on it really hard during the last 3 years and it's materializing now, so we are very happy about it. This is actually necessary if we are to move forward. It's the main objective is to minimize the asset commitment risk. We have had no issues with post-settlement issues, but it's necessary going forward that we minimize such risk. And you asked me from an investor perspective.
What you're taking away from investors?
Yeah, we are not taking away anything. In fact, we are guaranteeing settlement. And as far as sellers are concerned, that's a concern, because delivery versus payment is, as at now, the moment a transaction is done, the ownership gets transferred to the buyer without a commitment, a firm commitment about the settlement. But with the introduction of the DVP, the transfer takes place at T+3, the 3 days from the trading date. And you minimize, by doing that, you minimize the settlement risk. So it's an incentive actually. The investor should be happy about it. And if we are to move forward as a stock exchange, I think this had to come. So better late than never. And we are hopeful that with the introduction of the DVP, it will be more attractive. Our market will be more attractive to foreigners. And in Indeewari, particularly foreign funds, when they look for markets to invest in, they have a tick box. And as to whether a particular market has a DVP settlement mechanism is one of the items they look at. So particularly at a time when we need to attract foreign investment, I think this is a welcome move. And let me assure you once again, there is no change to the way things happen now.
But if we go back to our usual traditional system and this new system that you're introducing, the delivery versus payment system, what do you expect to bring about? What changes will be brought about? Because the concerns about whether there'll be changes to day trading or whether there will be changes in terms of settlement, these are all massive concerns brought forth by investors. So this could be valid if we don't address their concerns. But what changes are you bringing about, and how will this actually benefit investors? I know you addressed some in our first question, but going forward, how would you establish their confidence if you say this is a good system?
Yeah, so actually, Indeewari, again, there is no change as far as investors are concerned, the way they trade, what they do now, and what will happen after the introduction of the DVP. There is no change whatsoever. Let me give that assurance straight away. There should not be any concern on the part of the investors. What takes place is something between the brokers, the broker back officers, and the CDS. Their systems had to change. Systems had to change to this new settlement mechanism. And we introduced a new margining model that was specially catered for our market. So this is something for the benefit of our market, and investors won't be affected at all. Neither will the brokers or any other market participant for that matter. It's a mechanism to do with the broker back officers and the CDS to ensure to take away any risk that is there with regard to settlement.
You did mention that this will be attractive to foreign investment, foreign investors. Foreign investment is an area that we've struggled throughout. Of course, with the pandemic, there has been a lot of challenges in terms of attracting foreign investors. But what is going to be the SCC and CSC model or approach going forward? Because this has been an area of much struggle for us in Sri Lanka, whether we talk about trading stocks or investments as a whole to the country.
Yeah, so foreign outflows no doubt is a concern, but if you take the region Indeewari, it's a pattern, it's something that is taking place, but that doesn't mean that we should just lie down and watch the situation. We need to attract foreigners, particularly more funds to come. But as I said earlier, there are certain things that they look at when they decide whether to invest in a particular market. So maybe some of the rating downgrades that we have seen, maybe one aspect that affects foreign investment. But we need not unduly worry because, as I said earlier, this is a phenomenon that we see in the region. But we are doing a lot to attract foreign investment, foreign portfolio investment. So this is one step. We need to go step by step. So this is a huge step, I would say, which will bring confidence to our market. And the way we have handled the market, the regulatory mechanism that is presently available, other safeguards that are there, investor protection, all of those, the exit mechanism, you can come and go. So those are positives that we have in our market, and we need to do more. We had this the CSC, the BOI, and the CCC. They had an investment forum, first of its kind we saw recently. So these are measures that are being taken to attract foreign investment, and we are hopeful that they'll come back. They won't go forever. When things improve, we are hopeful that they'll come back.
But don't you also think that these controversies surrounding certain measures or certain trends in Sri Lanka's stock market, especially during the massive peak and the sudden slump of market indices, there was concern that the Securities and Exchange Commission would be unduly regulating, or there was an attempt to curtail credit. How would you address or respond to these criticism?
Yeah, so Indeewari, there is volatility in all markets. That's something that we see in all markets. But a certain amount of volatility will always be there. But we need to cut it down. There should not be too much of volatility. So we saw the market seeing unprecedented gains, particularly in, it was a gradual move. I wouldn't say it was a sudden move. It was building up, and that was a trend world over. And January, February, we saw it going up, and I saw some analysts have said that those were dizzy heights. So those heights will be there, but what had to happen, a correction had to take place, and market has stabilized since then. And any undue fears, I would say this, if there were any fears, there were misconceptions. I think people misconstrued certain steps that the SCC and the CSC took. We as regulators, as HCC as the regulator, has to ensure stability in the market. So I think that was an unwarranted fear that people entertained. Some, I think, somewhere in January, in February, and the market came down to an extent. But in Indeewari, these happen in markets. Markets go up, markets come down, then they stabilize. So the market has stabilized now, and I think we are very happy with the way the market is performing. And let me tell you straight away how the market has performed. We have seen the benchmark ASPI has risen by over 14%. The S&P SL 20 again by nearly 15%. The market cap has gone above 3 trillion. It's actually 3.4 trillion at the moment. Then,
we're talking about so far this year.
So far, this year to date. So these are positive developments, and that's why I say the market has stabilized, and the daily turnover year to date is 4 billion, which used to be in the range of about 750 million in 2019. The daily turnover, the number of transactions, which used to be about 5,000, is in the range of 20 to 25,000 a day. So these are the positives that we have seen despite the present situation.
Are you attributing this stability to certain measures taken by the SEC and Colombo Stock Exchange, or could this have been a natural phenomenon?
No, so it's those are the positives. I think the outlook that people see, the investors see, and also the confidence that people have, the proper regulatory regime, the way things are happening at the Colombo Stock Exchange. Then of course there are other factors which have contributed to the market doing well. The corporates are doing really well, and there again a record-breaking performance by the listed companies. The first quarter, the 2021 first quarter earnings has gone beyond 100 billion, which is a record. So the corporates are doing well. So
despite a pandemic
despite
situation?
the pandemic, the third quarter of 2020 saw record earnings, and the first quarter of this year.
So the economy is not doing all that bad?
All that bad. I think we hear a lot of negativity, but I think people don't talk much about the positive aspects.
Before we go in for a short break, something else I want to clarify also. There were certain concerns again that we spoke about, that the SEC doesn't seem to be working well with stockbrokers or the CSE. Of course, we know that the CSE and SEC together have been bringing about several changes, but what is this situation about the SEC not working together with the stockbrokers as amicably as we expect this to happen?
I'm hearing that for the first time, Indeewari, to tell you very frankly. Since I took over, the present commission took over, it's 1.5 years since I took over, we have had a constant dialogue, and I would say a cordial, absolutely cordial relationship with all stakeholders, not only the brokers. We constantly meet, and even I have had their fullest cooperation, I must say, in every step that we took. Even when there was some concern about the introduction of the DVP, again some misconception that the investors would be affected. We had a meeting. We had a meeting with the brokers. They were fully with the CSC and us, and they all embraced the introduction of the DVP. So I think if at all, as I said earlier, I'm hearing it for the first time. But if there is any such perception, I would say it's just a myth.
So DVP goes live on the 26th of July, and that enables investors to have a seamless, smooth trading platform.
Definitely.
Right. We'll take a short commercial break here at Hyde Park and return to speak more. Welcome back. We are in conversation with the chairman of the Securities and Exchange Commission, Viraj Dayaratne. I think we should move on to talk a little about regulatory aspects. The Securities and Exchange Commission bill, a draft was cleared by the cabinet, by also the AG's department, and we're talking about gazetting this bill. What is the stage, what is the status of this, and what changes are we looking at? How will this improve Sri Lanka's markets and, of course, instill confidence and ensure a better and smoother platform?
Yes, Indeewari, I'm happy to announce that we are at the very latter stages of enactment of this new piece of legislation, and we have been talking about this for years. And now the cabinet has approved it. As you said, the Attorney General has cleared it. And the next step is for it to be gazetted. And it will be gazetted this week. And after being gazetted, you have to wait for a period of 2 weeks to see if there are any challenges to the bill. And thereafter, it can be introduced in Parliament. And we see that the government is very keen to have this legislation enacted. So we are very confident that it will happen very soon. Then you asked me about the changes that will happen with the new piece of legislation. Well, it will strengthen the regulatory regime. There will be a lot of changes that will be brought in. From a regulatory perspective, the offences, I mean, people talk a lot about market offences as to what conduct constitutes an offence. We have two principal offences, market manipulation and insider dealing. So as to what would constitute insider dealing, all the ingredients, the conduct, as to who can commit this offence, all of that has been very clearly spelt out. There are certain ambiguities as at now, but with the introduction of the new law, those ambiguities have been taken away. Again, with regard to market manipulation, who can commit market manipulation, investors, the brokers or other intermediaries, how will that be committed, and all of those have been very clearly spelt out so that there is no ambiguity. So if you find that there is any wrongdoing, it's very easy to identify whether because sometimes it's a very thin line between what is permitted and what is prohibited, particularly if you take market manipulation. So it's not very clear cut, but with the new law that has been cleared, and it will be easier for the regulator, and the punishment that can be imposed has been enhanced. Now the major market offences will be tried in the High Court. Presently it's the Magistrates Court. So the courts have more power with regard to the punishments that can be imposed. Then another feature is now if there is any wrongdoing, if there is any act that is against the provisions of the Act, it is a criminal offence. And what the Commission can do is to take that person to court. But with the new law, there is provision for administrative sanctions. So depending on the misconduct, depending on what the person has done, you can impose a punishment that is commensurate with the wrongdoing. So
the SEC can?
SEC can.
Okay, that's the administrative if you
sanctions.
deem that there has been some wrongdoing committed,
we can, taking into consideration the extent of the wrongdoing, the nature in which, manner in which it was done, and so on. It can either be a penalty, it can be restitution, it can be a directive that can be issued against a particular person. And there is also another very, very important step, change that has been brought about, the imposition of civil penalties. Now, as I said earlier, if you commit an offence, it's a criminal act. You have to be taken before a criminal court. But with the new law, depending on the circumstances, the SEC can take a person, institute proceedings in the civil court, in the commercial high court against a person to recover the loss that a particular person has suffered,
right.
Recover damages, as well as impose a civil penalty. And the damages recovered can be given to the person who has suffered loss. So that's a significant change that will come about with the introduction of the new law.
Going back to the administration sanctions.
Administrative sanctions.
Administrative sanctions.
Yeah.
But does that mean this SEC, with that clause, will be able to take arbitrary decisions, or will there be a set of guidelines or certain framework that the SEC works within when ensuring that you take action against? This is nothing to do with going to court or opening a legal case, but if the SEC takes decision, will that be arbitrary?
No, certainly there will be no arbitrariness at all. Let me tell you this straight away, Indeewari. These measures can be there, but it's how you regulate. The measures can be there. If you don't regulate properly, if you don't apply them properly, there's no use. So there won't be arbitrariness before the imposition of any penalty or any directive with regard to restitution. The party will be heard. The party will be heard. Opportunity is given to the party to
by the Commission itself.
By the Commission, the party will have an opportunity of putting his side, telling us his side of the story. So it's
in the past, we've either seen these being neglected, overseen, or certain actions, the SEC being unable to take action against that. But is there really keenness to go ahead with this bill, with this piece of legislation? We've been talking about this. I've been questioning most of my guests about when this will happen. There has been a lot of delays. Of course, we're happy to see that this has got, it's all clear from the Cabinet, AG's department. But what is the pulse of the market and those involved, the stakeholders?
Yeah, I think the stakeholders are very keen to have this new law in place, because we are far behind. We have to change with the times. We have to look at other jurisdictions. We have to be up to date with our legal regime. That again, Indeewari, is what builds confidence. Now, you spoke about attracting foreign investments.
Investors.
If we are to attract foreigners to our market, we need to have a proper legal regime, which is up to date with compared to other jurisdictions. So these are salutary features that we find in the new law, which will create that confidence. And because it's what is important is to build confidence, to demonstrate that there are proper measures with regard to investor protection and also market development. Now, this law is not only tightening the regulatory regime. I must tell you, it has a lot of features which will ultimately result in the development of the market. It has several enabling provisions for the development of the market, infrastructure with regard to various types of funds, fundraising options, opportunities. All of that can be found in the new law.
While you tighten regulation, ensure that there is the fabric is stronger here, we are also talking about awareness, literacy about investments. We don't see Sri Lanka, we don't see much interest due to lack of knowledge, due to lack of awareness. Is the SEC doing enough to address this?
We are doing a lot in Indeewari. I think a lot of people don't know the extent of the measures that we have taken, as well as not only us, even the CSE. So what we did was, because of the pandemic, previously the practice had been to have seminars, go out to into the country, to remote areas, and conduct various awareness campaigns. But with the restriction in movement, that is not possible. Even as far as overseas campaigns are concerned, we had the road shows and various opportunities to meet fund managers and so on. So since we do not have that opportunity now, we have resorted to social media. That we have our Twitter account, we have our Facebook page, we have a YouTube channel. So with all of that, we are disseminating a lot of information. A lot of information. You see, we post at least one post a day on our Twitter account. The do's and the don'ts, the fact that you should always consult a registered investment advisor, because we also see the bad side of social media is you find a lot of people advising the public about investments. While some of that is good, you find that most of those who indulge in this are not registered investment advisors. So it can be dangerous. So that is why we are disseminating information as to what you should do, the importance of doing your homework. We say in law, we say caveat emptor, buyer beware. Right? So if you want to invest in the stock market, do a study, understand what the market is. There's a lot of material that is available. You look at the social media, that the channels and other means that the SEC adopts, uses, then what the CSE does. I think the message we need to send out is rely on those platforms, because they are reliable.
Right. I'd like to, again, before we go in for a break, something I want to ask you about is what other legislation or regulations need to be brought about. We know you spoke about what's already under discussion or what's already in the pipeline, but from your legal background and the work that you've done too, what more do we need to do here in order to strengthen that framework, especially to protect investors and other stakeholders?
Yeah, it's very important to ensure that there is consistency, consistency
Something
and
we've been
predictability.
talking about for a long time, but
That's right.
which has not been
Consistency so that the investors as well as all other stakeholders know what is in store for them. So that is very important. We are alive to that need, and we have taken several measures. We have brought in best practices guidelines for the stockbroker community. It was developed with the assistance of by the CSC, with our input as well, and with the input of the broker community. It was unanimously agreed upon by all broker firms, and that is in place. That will enhance their capability, their efficiency in advising their clients. Then we introduced a surveillance guideline, setting out the do's and the don'ts, not only for the investors but even for other market intermediaries. So that will safeguard the integrity of the market. Then with regard to intermediary rules, we have revamped them. We will be introducing them very soon. So there are a series of measures that we are taking in order to ensure that we are able to maintain the integrity of the market and build that confidence.
Let's talk about how the facilitation of listing of special purpose acquisition companies. What is the approach here?
Yeah, so we need to encourage more listings in the very if we are to have more liquidity in the market. So we have relaxed and expanded the listing criteria. That way, more companies are able to list, even startups and tech companies. So we have seen about 3 IPOs, very successful, oversubscribed by several fold. And we saw for the first time a listing on the Empower board, where I think they were able to raise some 500 odd million rupees. Again, it was oversubscribed. So that is from the point of view of listing of companies. So we need to have alternative listing opportunities. So SPACs, as you said, special purpose acquisition companies, is one such mechanism which you find in other countries. So there was this proposal that was brought to us. We have granted in principle approval, and the CSC is working on the legal framework. So that is where a shell company can be listed, and then a target company can step into its shoes subsequently within a specific period of time. And so that makes the listing process even more easier. But there are certain safeguards that we have to look at. So this is a possibility in the future
that you're looking at,
which we are looking at.
How about SOEs, state-owned enterprises? We've been talking about this with the CSC too. There has been a lot of interest in bringing in state-owned enterprises with the intention of also reviving these enterprises. What are we doing here?
Yeah, so SOEs, the market is a place where they can raise.
Has there been any discussion or encouragement from the SEC side?
We have looked at it. We are happy to say Indeewari, the Ceylon Electricity Board, recently raised 20 billion rupees listed debenture, which is the highest debenture issue we have seen in the country. So that's an SOE. So we encourage other SOEs also to raise either equity or debt through the market. Then as far as SOE listing is concerned, we have a set of guidelines. What we have done is, without trying to relax the SOE guidelines, the SOE listing framework rather, we have brought in guidelines where the CSC can adopt those guidelines, take into consideration those guidelines in deciding whether a listing can be permitted. So that's a very good avenue, because SOE listing means the governance regime comes in, because there are certain governance requirements if you are to list. So those are the positives. They can raise the much needed the capital they require, as well as strengthen their governance structures.
But don't you think there is a lack of knowledge again from the government sector or those the authorities concerned about how or what benefits they have in listing with the Colombo Stock Exchange, or how they need to work about this, and how they could obviously come out of their debt situation? So how will the SEC and the CSC work on ensuring that that this information is passed on to the government sector, because they're not educated on this?
No, they are aware to a very great extent. They are aware. They have had discussions with us as well as the CSC. So they are aware of the opportunities that are available.
But is there lack of interest then?
No, I think they will come. So I think the CEB raising, as I said earlier, the 20 million debentures, in debentures, that could be a start for others to follow. And yes, we will, going forward, we are in the process of creating awareness, but I think we need to strengthen that, enhance that, and ensure that more SOEs are aware of this opportunity.
Sure. We'll take a short break here at Hyde Park. Do stay with us. Welcome back. We're in conversation with the chairman of the Securities and Exchange Commission, Viraj Dayaratne, who's addressing concerns and plans of the regulator, the SEC. Let's talk a little about demutualization of the Colombo Stock Exchange. We spoke about this years ago, and this is a topic again, just as the SEC bill. We've been discussing whether this is going to happen and what benefits we're going to see, and what's really the status of this alongside the SEC Act.
Yeah, this will happen. Indeewari, the government is keen to go ahead with demutualization as well. So the new law will have to come into place, which will enable the stock exchange to be demutualized. And the law, there is a separate law for demutualization that is also ready. Actually, this bill had been prepared previously. And the only issue that needs to be finalized is the share allocation. The share allocation between the member firms and the government. So we will have a meeting. The Minister of Capital Markets has indicated that he will meet the stakeholders and discuss this issue. So once we have finality on that, the demutualization law also will come in. That will again bring a lot of stability to the market. That will enhance the efficiency of the stock exchange. Its administrative structure, governance structure will change for the betterment of the industry. So that's another positive that we are looking at, and we are hopeful that that will also materialize in soon after the new act is new law is enacted. So that's something that all of us are looking forward to.
About new products, I remember having a similar discussion with the CEO of the Colombo Stock Exchange. We spoke about new products, bringing about attractive new products to attract new investors, to create that interest among the new entrants to the Colombo Stock Exchange. But what have you been successful here? How have you been successful in introducing new products? We spoke about real estate products to other attractive new products.
Yeah, actually, CSC and the SEC has been quite busy with the introduction of new products. As you know, we brought in the legal framework for real estate investment trust (REITs). So we are hopeful that there will be REITs in the near future, because there were so many tax incentives also introduced brought in by the government. So that's a positive we are looking at as far as REITs are concerned. Then we have approved in principle the introduction of gold-backed products. Then with regard to other avenues for fundraising, we are looking at crowdfunding. That's a web-based mechanism of raising funds. We have again given in principle approval for that. Then we have I think the SEC approved in principle again the legal structure for repo transactions. That also the CSC is presently working on the rules and the other framework that is necessary. Then going forward, we are looking at introducing Islamic products to the market. Then we have green bonds in mind. We have structured warrants that we are thinking of. We are also getting ADB assistance in this regard, the technical assistance to develop these products. So I think we have a whole heap of products lined up, It will take a while for the legal framework to be developed, but we are confident that with these new products being introduced, that will increase the investment opportunities both for not only for the investors but for issuers. It will bring in more liquidity to the market. So
How
those
soon
plans
are we expecting some of these products to at least start being available in the market?
Yeah, so as soon as the legal framework is concluded, prepared, then we'll be able to introduce them. So that's why I said the new law, when it comes into place, that will enable these products to come into the market, because some of them will require other infrastructure going forward. The DVP, some certain products require a CCP to be in place. So as we go along, we improve the infrastructure. With the improvement in infrastructure, these products will can be brought in.
I'd like to come back to the question of awareness and education on these products, especially now as the CSE and SEC are talking about introducing new products of investment tools, products. This question of education and awareness, literacy, how would you approach that going forward? I understand this has been a constraint. You did say as the pandemic developed and due to the challenges posed by the pandemic, you had to resort to social media. But then again, how do we go forward, especially with these new products that you're looking at? We do see only a handful that is literate in market transactions or products. But to the rest of the community that is interested, how does the SEC and the CSE look at a broad-based awareness campaign? Yeah,
so market literacy is something that we are concerned about. We need to increase that, improve that. And as far as new products are concerned, certainly the CSE and the SEC will jointly take measures to educate the public, the benefits of the new products. We will educate them, create awareness, and also in Indeewari, not only with regard to products, that's as far as products are concerned. So no sooner we have the legal framework in place, that is the time when we will go forward and carry out our awareness campaigns to promote those products. That will happen. In addition, you raised this question of literacy amongst the population. Right. I think that is something we are concerned about, and I'm happy to say that we spoke to the education authorities, the education ministry. The President Secretary facilitated a meeting for us with those who are concerned with the preparation of the school syllabus, the school curriculum. And we told them that we need to have something in the syllabus, not to crowd the syllabus,
I like that idea.
From a very young age, because we did some studies, and we saw in South Korea and Hong Kong how investments, the habit of savings, as well as capital markets is part of the school curriculum, not in a very broad sense. A certain component, that's why not to crowd the syllabus, but a certain up to a particular level we need to have in the school curriculum. That is how we can create awareness. So we are very happy to say that the NIE, National Institute of Education, took on board our proposal. And when the school curriculum is to be revised in 2023, of course it's a bit of a long-term plan, they have assured us that they will have content with regard to the capital market, and also in the syllabi of the universities, they will include that as well. So we are talking of creating this literacy from a young age, not wait till they reach the A-level standard, the A-levels or the university level, but from a young age. That is how I think going forward, it's a bit of a long-term initiative, but we still feel it's necessary.
I think that would be a very welcome move, given that the creation of wealth, investments are not something that children are taught in school education, because we don't learn what the practical side of life and lifestyle or work at school. But that will definitely be a very welcome move. We have about 2 minutes now before we wrap up this discussion. We spoke about plans, we spoke about new measures taken by the Colombo Stock Exchange. Where do you expect to end the year?
Well, as I said, we are growing at a very satisfactory pace. So I think if we continue this way, and if there is some respite from this pandemic, I think we will be at a very high level, and we can achieve a lot of success. And I think change is what is required. And as soon as we adapt to the new normal, the sooner we improve our technology. I think the second phase of digitalization is coming next month.
Right.
There's a third phase. I don't want to give you the list. It's a long list. It was an ambitious project. And we have gone way beyond our initial expectations. All credit to the joint committee of the CSE and the SCC. They have done a wonderful job. And I think we have embraced technology in a big way. So I think those who embrace technology, the sooner you embrace it, the better success you will have. So I think the way we are moving, we can look forward to a lot of success.
Thank you very much for your time here at Hyde Park. This was an interesting conversation, and I look forward to talking to you further on these topics once all these measures that you spoke about are implemented. Thank you.
Thank you very much for inviting me. It was a pleasure to talk to you.
We had with us the President's Counsel Viraj Dayaratne, the Chairman of the Securities and Exchange Commission. He was an additional Solicitor General and also a State Counsel. Thank you for joining us here at Hyde Park. We'll join you again next week with yet another episode of the program.